Folks, we have several major items to discuss. Number one of our plays that ran over 300% on Friday. What do you need to know and how did we find it? Number two, one play that is heating up massively and may have some massive runs left if a few things go correctly this week. Number three, an update on MMAT and MMTLP. And then finally, at the end of the video, we're going to be prepping for the big market events that are going to be occurring this week, including the Fed rate hike decision and the CPI report. And if you appreciate videos like this, make sure to hit that ravishing like button and also subscribe. Okay, so let's go ahead and start by talking about AMAM. Lovely AMAM. If you are a member within ZipTrader, you are likely extremely impressed with this bad boy. We briefed on it 30 minutes prior to market open at about 113-ish a share, and it ran to highs at 476 in the after hours. That's a 321% increase from briefing price to highs. Quite an accelerating run. Rockety rocket. Why did we brief on it though, and how did we find it? Well, AMAM is a super small company whose future is built around their success in clinical trials and eventual entrance to market. And they announced very positive preliminary safety and efficacy data from their phase 2 study on their treatment for metastatic breast cancer subjects. The study indicated a 57.1% confirmed overall response rate, which is solid for this class of treatment, and 100% disease control rate in patients who were otherwise resistant to chemo. What does disease control rate mean, Charlie? Disease control rate is defined as the percentage of patients with advanced or metastatic cancer who have achieved complete response, partial response, and stable disease as a result of therapeutic intervention in clinical trials of anti-cancer agents. So for preliminary data to show a 100% disease control rate in patients that were otherwise resistant to chemo without it, well, that is very solid and very exciting, and a shout out to all the folks who are working in companies like this one who are working to cure this disease from hell. But anyhow, we briefed on it roughly 30 minutes prior to market open because the company had dropped this news, and at the same time, the stock was already showing proof of concept. What do I mean by proof of concept? Well, it was already starting to react and move aggressively to the positive side on this news, which means we know people are reacting positively, and we know that many more people are going to find out about this news post-open as the news gets more widely disseminated. The pre-market is a key time to find catalysts for this very reason, because when they drop, you get to see a little bit of the reaction, but not everybody has seen that catalyst yet. But once the news disseminates, all of a sudden everybody has seen the catalyst. So if you can find it before the rest of the market finds it, then all of a sudden you can get alpha on the market. You can get in before it runs, right? At least that's the goal. Obviously, in some cases, there's take profit periods, there's morning panics, there's short attacks and so forth at open. So it's not always cut and dry, but obviously that is the goal when you're looking for pre-market catalysts. Takeaway, it's so important to be aware of catalysts when they drop in the pre-market, and it's very important to understand how FDA trial plays work, which yes, both of these things we aim to help our members within ZipTrader with. We of course have our daily morning briefings on catalysts and a whole in-depth section on FDA trials and approvals and playing them. Cough, coupon code Santa45, link down below. But plug for our program aside, keep your eye out for these because we're likely to see a lot more of these FDA opportunity plays heading into the end of the year and especially in the beginning of 2023. Okay, next, SMMT. So we briefed on SMMT on this past Tuesday, December 6th at about 114-ish a share. Over the next couple of days, it had a pump and breath cycle that led it to highs at 450 on Thursday, which was a 294% run from Tuesday's briefing price to Thursday's highs. Not as good as lovely AMAM, but still very solid. Solid solito. However, on Friday, it started selling off and barcoding. So what is the deal with this? How did we find this? And is there more opportunity left, Charlie? Well, the reason that we originally identified it was because they were jumping on a deal to license their lung cancer drug. But it's gotten a bit more interesting with reports showing that CEO Robert Duggan is increasing his holdings dramatically, which likely means he thinks these shares are going to go up significantly more. He knows something we don't know, or he thinks the licensing and or future deals that may go through are going to make a lot of money for the company and thus give him a big return on his increased holdings. It's worth mentioning that Robert Duggan is also a very, very successful venture capitalist who has a long track record of money-making ventures, which adds to the euphoria and attention on the stock. I love when you have some sort of leadership endorsement from a leader that is well known. It's kind of like if you have Elon Musk working at a new company, even if he doesn't know what he's doing at that new company, just the fact that it's somebody that has a track record causes a lot of people to be interested in it, right? Leadership and key man euphoria can cause people to overlook almost anything. And in this case, when it comes to a small cap stock, that can be paramount paramount to fun trading opportunities and hype potential. Now there's another angle with this. If you are a short biased hedge fund, you know that 90 to 95% of small caps that rally up huge end up dropping fast afterwards and usually evaporating all, if not more, of their move. So if you're short biased, your goal is to find stocks that run, and then once they start selling off just a little, you short them massively, dumping tons and tons of borrowed shares onto them to accelerate that downside and panic out people who had just been profitable on those positions, forcing a take profit cycle to begin. By dumping tons of borrowed shares after a massive rally has just started to cool off, you're doing two things. Number one, you're getting a very, very high average short price. Number two, you're helping unravel confidence by creating all this selling pressure after it is already starting to cool down and after people are already very deeply profitable and would be incentivized to take profits off the table. However, the big risk with this strategy and what we are seeing to some extent with SMMT right now is that when you do this with a stock that just continues going up after each cool down period, you may end up getting stuck short and that small cap stock may go up to 300% or more, and that leaves you susceptible to having to close your position or risk margin calls or at least risk management forced closures so that you don't blow up your fund. That is what may very, very well happen with SMMT. When you see stocks that pump and then breathe and then pump and then breathe and do this several times, that is oftentimes because you're dealing with coordinated short selling after each buying cycle, and they are trying to induce a broader dump on the stock from which they can take profit from. But if that fails, then you keep getting these cycles up and up and up until all of a sudden you get a final push where a lot of the earlier shorts get squeezed and you get a massive, massive ending rally. And with SMMT, she seems right now to be setting up for that. She keeps maintaining momentum and getting new catalysts, and as a result, continues punching short sellers in the face, causing buyers to literally railroad over shorts again and again. I don't know how many more cycles that SMMT can go up before short sellers at the bottom start getting crunched massively and start covering. But it's probably not too far in the future. Short interest as a percentage of free float has skyrocketed 1,364% in the last 7 days, according to Ortex. So they are trying to throw the book at this, and if they are successful, they'll make tons of money. But if they aren't successful, oof, this is going to ricochet in their faces. If the stock continues rallying into the 5, 6, 7, 8 region and retains at high levels for the next week or two, a lot of these lower price shorts are going to be sitting on deep, deep losses and backed into a corner that they never intended to enter. Remember, if you're a short seller, you're probably not looking that much into each individual company. You're just shorting small cap stocks, probably algorithmically, that are running massively. So when one of the 50 stocks isn't towing the line, it may take you a second to realize it, but once it starts sitting on massive, massive losses, you may think, hey, maybe I don't want to blow up the profitable position on the last 49 stocks so that I can continue this short position in this 50th stock, right? And if it gets to that point, they cover early and you get a massive rally. If it doesn't get to that point, all of a sudden you get more momentum that continues squeezing them and continues putting the pressure on them. And I think this is going to be a very fun battleground in the next couple of weeks. Next, MMAT and MMTLP, which is MMAT's preferred shares that are going for spinoff. Now, these were pretty fun until they weren't. So, we've been talking about the MMTLP privatization, which is a big deal because there's a ton of shares short, and generally shorts covered prior to entities becoming privatized for obvious reasons. And the main dates for this were December 12th, record date, and December 14th, which is the actual distribution date. And we have been covering this for months, and MMAT and MMTLP had so many ups and downs along the way. MMAT had a more than 2x run to 255. MMTLP also had a huge run to highs. But my previous outlook was MMAT and MMTLP could have a final pre-anticipatory run prior to the spinoff, and they did attempt that on Wednesday where MMAT ran to 255 from 163. MMTLP basically doubled again in that few-hour trading period, but then both just dove massively into the end of the week. Now, we've been accustomed to take profit cycles coming at random times. For small caps, things that go up must come down eventually. Again, like I said earlier, almost all small caps die off massively after their runs. These dumps aren't fun, especially if you don't have any risk management, but they are inevitable at some point. However, what is particularly frustrating about these plays, and specifically MMTLP, is that it ended up in FINRA halting on Friday, days before the spinoff even happens. Now, it's standard practice that regulators approve a record date and then a distribution date, which they did, and then allow the tickers to be freely tradable up to the spinoff or important event. Sometimes they freeze trading a day before, but usually you could trade until the spinoff happens, which is usually the after hours of whatever day the event is going to occur. However, FINRA appears to have arbitrarily frozen trading days before even the record date, which is incredibly frustrating. I mean, it would be one thing if they did it a day or two before distribution and conversion, but no, they decided to lock it down days before the spinoff even happens, which is incredibly frustrating because they did not tell the public, they did not tell investors that they were going to do this ahead of time. The fact that they decided to freeze this early without telling anybody in advance is quite frankly atrocious and should not have been allowed. This is not standard practice, and it is incredibly frustrating. For an agency that says their goal is to protect investors, it seems like here they did the opposite. It's incredibly frustrating. Why even have pre-approved dates that you post for everybody to know about if you're not going to tell them when you're going to freeze trading? And if you're going to arbitrarily freeze them days and days before you should do or before standard practices. And the other angle here is that short sellers who don't have to worry about freezes because they could trade via dark pools, they can trade off exchanges, and so on and so forth. Well, this means that they might be getting a very, very sweetheart deal here because they can close out of their positions off the public market without worrying about the main market showing a spiraling share price, which could complicate their deals behind the scenes. Either way, I mean, it seems to me that these regulatory freezes are being applied a lot more arbitrarily, and it would have been nice to have clear guidance on them, and we should demand clearer guidance. I understand fully well that regulators want certain market stability measures to be put in place, but can we at least get some clear and consistent guidance on what they are and when they're going to be applied? And a lot of times it shafts retail traders and investors that these regulators say they're trying to help. Anyways, very frustrating conclusion to MMTLP and MMAT, and a mostly fun cycle that fizzled out way sooner than it should have. That said, I'm very interested in what MMAT does this week. Starting tomorrow, I believe the overall MMAT battle continues, and I see new catalyst runs and opportunities heading into 2023. So keep your eyes on it. That said, like I've always said with these plays, I am not a fan of the hold and hope strategy. I believe when you see an opportunity, you take a risk managed swipe at it, and then you get in, you get out, you get in, you get out. You don't go and you just buy it and you marry it and then you take it to the grave. I don't believe in that strategy when it comes to catalyst plays, squeeze setups, and so on and so forth. Okay, let's move on to what's happening this week macro-wise, the macro of the macro. Tuesday, December 13th, you have the CPI report, the next castration of purchasers index. This is probably going to be the last influential inflation report of 2022. In fact, I think it's the last main inflation report of 2022, and it will likely be a big topic of conversation in the Fed announcement that comes the day after. We had the producer price index come out on this previous Friday and show prices were slowly coming down, very, very slowly, but we're still very, very high. You go to the nowcast, the predictions for the report coming this week, it shows overall item CPI is expected to come in at 0.47% month over month, core at 0.51%. Both of which are hotter than the previous month report, which means markets are at least factoring in some level of disappointment on inflation. But if it comes in even hotter than that, that's a disaster, and markets will dump hugely knowing that the Fed may be reactionary the very next day. Now, the question though is how long-term are markets thinking right now? Because obviously, as you may have noticed, most commodity prices and energy prices are down and heading in the downward direction. Obviously, wages are still pretty high, so that's going to keep up prices. But if you're looking at some major components that were causing inflationary pressures, a lot of them are down. So you could expect inflation to start plummeting, at least the pace at which it increases. Maybe it should increase at 0.0 month over month in the beginning of 2023. So the question is, how forward-looking are markets right now? Because obviously markets have been forward-looking in previous inflation reports that seemed like they were good. And then all of a sudden, 2 months later, the inflation started heating up again and markets were like, shite, maybe we should just focus on the month over month reports again. So this time around, let's see how resilient they are. Obviously, the data looks like inflation's going down. It's unclear if that's going to continue to be the trend. So far, it does seem to be, though. And then on Wednesday, the 14th, we've got the conclusion of that last FOMC meeting of the year and last rate hike announcement and economic projections and so on and so forth. Markets are expecting a 78% chance of a 50 basis point hike, a 22% chance of a 75 basis point hike. That, of course, though, I think you're going to find is very much up in the air because that inflation report, if it is hotter than expected, well, the Fed has knee-jerked a lot in the past on hot inflation reports. reports. So I would not be surprised if it does come in a little bit hotter, even though the data suggests that it won't be for long. But if it does come in a little bit hotter, I would not be surprised if the Fed does do a little bit of a knee jerk back to 75 basis points. I think what's more important, though, is if we see the overall trajectory become a little bit more clear, because right now markets want to see by the end of 2023, Q3, Q4, markets want to see the Fed start moving rates back down out of restrictive territory. So is the Fed going to portray that that is their intention, or is the Fed going to portray that they're planning on keeping it very, very restrictive, not just in 2023, but also 2024? Those are things that markets are going to pay very, very close attention to. Powell's speech and Powell's press conference and overall Q&A session is going to be very, very closely analyzed, probably for weeks. So pay very, very close attention, and we'll cover it when it comes up. Anyways, folks, that caps off today's video. Make sure to hit that ravishing like button and subscribe if you appreciated it and saw value in it. And if you'd like to join us in ZipTrader U for our step-by-step lessons, private chat, daily morning briefings, full price target list, and all other trading resources, make sure to hit that link down below and use coupon code SANTA45 to get a nice discount that will expire shortly after Christmas. Anyways, have a great rest of your day, and we will see you in the next one.